What's good is Bit Money D, assets only, no liabilities.
Tariffs have been giving the stock market another round of beatings because President Trump recently announced that the 25% tariffs that were paused on Canada and Mexico are going to be restarting in March. After that, we also got the news that Warren Buffett sold off his entire stake of SPY and VOO, which are two S&P 500 ETFs, which have a lot of investors speculating as to why he would do that. And then number three is crypto, because Bitcoin prices have fallen to below $90,000 a coin for the first time in 2025. So there's a lot that I want to go over in this video, and here's what I'm going to do. First, I'll talk about the Trump tariffs and its impact on the stock market. Number two, I want to talk about Warren Buffett selling off those S&P 500 ETFs. And then number three, let's talk about crypto. So starting with tariffs, remember in early February, President Trump announced a 25% tariff on Mexico, a 25% tariff on Canada, and a 10% tariff on China. The 10% tariff on China was imposed, and that was kind of business as usual. But the tariffs on Canada and Mexico really shook up markets, and 2 days after those tariffs were announced, they were paused because President Trump worked with Canada and Mexico and agreed to put a pause on those tariffs if both of those countries work to secure the United States border against illegal immigration and illegal drugs, and both countries agreed. But now time is coming up. And this is where President Trump is saying that tariffs are going to be coming back as usual, and the stock market did not like that. I think a lot of investors were hoping that maybe these tariffs were just a negotiation technique. Maybe they're not going to actually go through because, well, that could really impact inflation. It could impact the economy. It creates more uncertainty. And no investor, or most investors, I should say, don't like uncertainty. Now remember, tariffs are a tax. If I produce a car in Mexico and it costs me $10,000 to make that car in Mexico, a 25% tariff effectively means that I now have to pay $12,500 to produce that car in Mexico, because I still have to pay the $10,000 for the car and then the $2,500 tariff tax to bring that car into America. So now if I'm a car company and I have to pay this additional 25%, I can either A, eat up all that cost myself and shrink my profits, or I can B, charge you more money to buy that car. This is why some people are concerned that these tariffs can make inflation worse, and there's a lot of uncertainty as to what's going to actually happen. But the question here is, what are these tariffs actually going to impact? Because Canada and Mexico provide very different types of products. From Canada, some of our biggest imports include energy, machinery, and lumber. You'll see why that matters in just a second. From Mexico, it is cars, fruits, and vegetables. Now, when it comes to
That lumber part is real important because, the housing market is kind of, for buyers, the housing market ain't looking too good. But for investors, the housing market looking pretty good from what I've been seeing.
energy, there's been a little bit of a leeway in tariffs on energy, specifically oil. But the reason why lumber is interesting is because lumber is used in housing. And we already know that there's a very unique housing situation going on in the United States where housing is very expensive. There's a lack of affordable housing in America, and building is already so expensive, with a lot of people being deported who are involved in the construction industry. And so that's making construction a little bit more difficult. Well, if lumber becomes more expensive, that could also make building new housing, building new real estate potentially more expensive as well. And when it comes to Mexico, cars, fruits, and vegetables, well, the auto industry is already confused and concerned about what's going to happen with tariffs, because if you're making a lot of cars in Mexico, well, that could be a very expensive tariff to bring those cars back in to the United States. Now, this is why on March 11th, 2025, I'm hosting my wealth building workshop where I'm going over the changes that are happening in our economy, because there's a lot from tariffs to Doge to technology, and how these things create unique investment opportunities. Because the reality is, for every financially savvy investor, these changes in the economy create opportunity. A lot of people talk about the emotions. I want to talk about the opportunity. That's what I'm going to be going over on this workshop on March 11th. I'm doing it twice on March 11th, once in the morning at 10:30 a.m. Eastern Standard Time, and again in the evening at 8 p.m. Eastern Standard Time. It's completely free, but if you want to join, you do have to register to save your spot because there's a limited number of people that can actually join me live. So if you want to join, I have the link for you down in the description below. This brings it to number 2, talking about Warren Buffett selling off his VOO and SPY shares. Let me read you the first line of the Yahoo Finance article that was talking about this. Berkshire Hathaway B sold its entire position in both the Spider S&P 500 ETF, which is SPY, and the Vanguard S&P 500 ETF, VOO, during the fourth quarter of 2024, according to the SEC filings released last week, as the investment giant continues its longest selling streak in years. Warren Buffett is now building up his largest cash pile ever. Now, one thing that I did want to make clear, because it was when I was reading the articles talking about this, there was a lot of fear and panic, but I want to make sure we just kind of set a little bit of transparency. Warren Buffett owned a little bit under $50 million worth of SPY, and VOO in total. That is a tiny fraction of his total investment value. Berkshire Hathaway is a $1 trillion company. So $50 million of stocks is really a drop in the bucket for something that large. So take that for what it's worth. Now that we understand the transparency, let's talk about what this could mean. Because Warren Buffett has been selling stocks, funds for a long time. And he has accumulated the largest cash pile ever. Now, he's always criticized about anything he does because he's in such a public position, but if we look at the reality, he is one of, if not the greatest investors of all time. So he has a little bit of an idea of what he's doing. Now, we don't know why he sold this. A lot of people are speculating. We don't know exactly why he did it. But some people are saying that, oh, he believes that the economy is going to crash and that's why he's selling this. He doesn't believe in the S&P 500. Now, the thing that I want to remind you is speculating is speculating. It's assuming, and you know what they say about people that assume. But the thing that I want you to remember is Warren Buffett is a professional investor who spends all of his time focusing on his investments. He is an active investor. And at the same time, he talks very openly, and still does, about how his investment strategy is going to be different than what other people do. He doesn't say you should copy his investment strategy. He says that the average person should be just investing in index funds that give you exposure to the broad economy, and he often references the S&P 500. Again, the S&P.
That's what I'll be trying to do because I'm a beginner. That's exactly what I'm trying to do. You got to have a strong foundation. This is for long-term gains. This is not no get-rich-quick stuff. This take a long time. He right about that.
S&P 500 is a group of the 500 largest companies in the stock market. SPY and VOO are 2 ETFs that give you exposure to the S&P 500. Again, as a disclaimer, I personally own shares of VOO. And so I want you to just understand this and not get caught up in the emotions. Warren Buffett says very openly that for the average person, one of the best things that you can do is just invest in the S&P 500 for the long term. For the long term is not 6 months.
What I just said. Listen to him now. I ain't even seen this video.
It's not 2 years. It's years, if not decades. That's what the long term is. But Warren Buffett obviously has a very unique strategy where he looks for companies where he believes that there's a very unique opportunity that he can hold on to for the long time and maybe even add additional value to it. And he's seen a lot of success through doing that. So that's what he did. A lot of people are freaking out about it. A lot of people are turning it into something that, well, we don't know of yet.
Turning into something that it's not, basically, because they don't know. They don't know what this man really did, what he did. They don't know why he did what he did.
Beware of rumors, beware of speculation. This is what we know as of now. The third thing
that's another thing when it comes to money and investing, never go off of speculation.
Really hitting headlines recently has to do with cryptocurrency. And again, we've been covering all of this in Market Briefs. Market Briefs is my free financial newsletter where my team is breaking down what's happening in the financial markets. It's free, and I have that link for you down in the description. But Bitcoin prices have fallen to below $90,000 a coin, and a lot of people have been freaking out. Now, another thing that I want to do here is take a look a little bit at history. Because if we take a look at Bitcoin prices 6 months ago, Bitcoin prices were around $60,000 a coin. So, in the grand scheme of things, Bitcoin falling below $90,000 a coin really isn't, that crazy. Sure, if you're hoping that Bitcoin's going to go from 100,000 to 250,000, it's not the best direction, but you can start to see where, when you start to zoom out, you can see it's not a drastic sell-off. The second thing is I want to remind you that
At the time recording this video, Bitcoin is sitting at like 84,000. That's, to me, that's good. I love when it go down because that's a perfect time to start. Buy. Everything gonna sell, baby. Bam, everything on clearance, baby. That's how I look at it. If it's on sale, I'm gonna get it.
cryptocurrency is a speculative asset. Speculative means volatile. It can go up very quickly. It can fall very quickly. And unfortunately, you have a lot of people that get excited when you see big rallies in crypto.
He's saying a lot of y'all get too emotional when y'all see that happen. Just sit there and be calm and just think before you act. Y'all gotta stop going off of what everybody be talking about, man.
Cryptocurrency. And that's when they come in and buy a lot. But it moves fast up and down. It can boom just as fast as it can crash. And so if you are investing in speculative assets like cryptocurrency, that's fine. But make sure you treat it like a speculative asset in your portfolio. It really bugs me when I meet people that say, oh yeah, I'm entering the investing space. And I say, oh, that's good. And then they say, I have all my money in these meme coins or these random cryptocurrencies. And well, that's very risky. You're gambling. It doesn't matter if it's crypto or if you're...
Yep, you're gambling. If you don't know what you're investing in, all you know is it's a coin and a few countries are using it. You don't know anything about what you're investing in, and you need to do some research for a few days. Research isn't just, oh, I'm gonna Google it. Oh, I know what it is. No, you need to do what I'm doing right now. Watch videos and learn. Go to school. You don't have to go to school, but I'm in school right now, recording myself in school, learning. Y'all need to do research before you invest. Do research before you invest. Do research before you invest. Stop listening to all these people on Instagram. Stop listening to all these people on Facebook and YouTube, wherever. Do some research. Don't be a gambler. You're gonna lose.
You're dumping your money into penny stocks or to random trading. There's a difference between investing your money for the long term, fundamental investing, and having speculative investments. There is a place to have speculative investments. You can have 10% of your investment portfolio be speculative investments. As you build more wealth, maybe 15, maybe 20% of your portfolio be speculative investments. But to bet your life savings on speculative investments is going to be very volatile. Now, look, don't get me wrong, stocks go up and down too. Stocks crash. We've seen 16 recessions in the last 100 years. We've seen 25 bear markets in the last 100 years. Real estate prices crash. The 2008 housing market was a complete disaster for every real estate investor who was buying before 2008. So yes, asset prices go up and down. But when we talk about speculative assets, they can go up very fast and they can fall just as fast. And so if you are an investor in anything, just understand that you should be focused on the long term and not get caught up in the day-to-day swings, because it is crazy how many times you hear people say, oh, I'm going to be an investor in this thing. And as soon as this thing falls a little bit, they panic, they sell, they freak out, they get all emotional. So if you are an investor, stay an investor. If you are a trader, well, I don't know what to say because I'm not a trader and I don't understand that game. To me, that is gambling. So I want you to understand that. Stay calm, be able to cut through the noise. Don't get caught up in all the crap, because there's a whole lot of crap out there. The traditional media is in the business of selling a bunch of hype. How do I know this? Because my company, Briefs Media, is a media company. We're in the financial media space. One of the reasons why I'm such an advocate for market briefs is because all of our financial news is in that one email, so we don't have to have a bunch of sensationalist headlines. But when it comes to the media, They want to drive clicks because that's how they get paid. But what I want you to remember in general is things are generally not as bad as the media might make it seem, and things are also generally not as good as the media might make it seem. So when you hear bad news, I want you to stay calm. When you hear good news, I want you to stay calm, because emotions are the enemies of profits, and we've been seeing a lot of emotion in the markets, and the emotion.
My new thing this year is don't stop listening to your emotions completely. Like, your emotions ain't never gonna save you. Discipline will.
Is not going to go away. We have a lot of changes happening in our economy. We have tariffs happening. We have changes in technology. We have Doge changing things. We have new rules and regulations coming out of the economy. We have the sovereign wealth fund. I mean, there's a lot of things that are happening. It makes a lot of people very emotional. But if you're an investor, you want to find the opportunity, but that requires you to stay calm. Again, I'll be keeping you posted here on my channel. I'll keep you posted on market briefs, and then on March 11th, I have my workshop where I'll be going over how all these changes can create a unique investment opportunity for you as well. So if you have not registered for that yet, I have the link for you down below.
Great video. I hope y'all paid attention, listening to what he's saying. Let's get this money, y'all. Assets only, no liabilities.